Kerry, paying one's spouse, wife, partner, husband, whatever, when you're in operation as a farmer to try to reduce your tax bill, is that on?
No, in a simple answer. The IRD have sneakily put a section in that basically says any payments to your spouse is a deduction that's disallowed unless you get consent from the Commissioner. Up until April this year, if you had a civil union type relationship, you could actually pay the wages to your spouse, but they changed that in April, and you can't do that anymore either.
So what do you have to do? I mean, there would be some who would like to draw wages because they actually do a lot of work.
Yeah, definitely there is, and you can do it, but you've actually got to make written application to the Commissioner of Inland Revenue, and so you've got to tell them what you've done to try and get other staff, what duties they're doing, the hours of work, your type of business, and why you actually need your spouse to work on the farm. The fact that it's just easier for you is not really an excuse, and they'll turn you down. You also got to look at the level of wages. You just can't pay them what you want. It's got to actually be based on what's in the area. So if someone else is down the road paying $12 an hour and you want to pay your wife $15, well, you can't do that. They'll actually turn you down, and if you do pay the $15 an hour, they'll come back in and say, no, sorry, that extra $3 an hour, we're going to add back into your income and tax you accordingly.
Cool, that's a bit tough, isn't it?
Oh, yeah.
I'm not going to ask you to ask.
Oh, no, it is tough, but it's sort of understandable because, if you've got a spouse that isn't working, it's a good way of trying to get rid of some tax that you may otherwise have to pay.
But the thing is that the days of one's wife making scones and cooking roast dinners have gone. I mean, they now probably do as much, if not more, than the hands-on person.
Oh, yeah, and that's true, but this is the IRD haven't caught up with that. The legislation still takes the view that the spouse is probably at home looking after the children, doing the cleaning or whatever, and if they're working on the farm, well, they do it on a voluntary basis.
Kerry, if you are in a partnership as a married couple or whatever, are you therefore expected just to take one lot of earnings out?
Well, you can take as much as you want. Obviously, if you're the main farmer, you take it out as drawings, and that's just the way it is.
That can be shared between the two, sort of thing. Yeah. People who want to, at the end of the year, suddenly say, hey, listen, I think we should have been paying you wages, can we just quietly do that?
Definitely not. It's one that IRD do look out for, and if they see these wages sort of sneak in, they will come and actually ask you some hard questions. You've actually got to pay the wages during the year, so every month or fortnightly, weekly, whatever, and you've also actually got to physically pay the PAYE to IRD.
Every month?
Yeah, every month. You just can't sort of do it whenever you think or at the end of the year, just because I've got a huge profit, so I'm going to get rid of some tax here.
And I guess that also avoids, or means that you can't, as an accountant, at the end of the year, just do a wee transaction on paper and say, well, that sort of sorts that out.
Yeah, no, definitely not. It does limit our options.
Whatever I think of, they've already covered it.
Yeah, they have, yeah.